Year to date, Home Depot stock is down over 25%. When Home Depot stock goes down by that much, does it present a great buying opportunity? We'll talk about that and more on today's show. What is going on, investors? Hopefully, guys are doing well out there. Time to talk about the Home Depot company, ticker symbol HD. The company just reported their Q1 earnings before the bell today, and the stock is actually performing relatively well. Revenue came in at $38.9 billion. On today's show, we'll go through these Q1 numbers. I'll get you up to speed with all the revenue, the profit, how inflation is impacting this company. We'll look at the balance sheet. We'll look at cash flows. We'll get you up to speed with everything that you need to know when it comes to your Home Depot investment. Come over here and look at this from a technical perspective. I'm trying to look super fancy with all this stuff on the screen, but I'm going to make it real simple for you and show you just some real basic stuff when it comes to Home Depot, especially when we're talking about a stock that year to date is down nearly 27%. That's on the heels of going up by about 1% on today's trade. I am recording this during the trade. Who knows what happens the last couple hours? But all we know is year to date, Home Depot stock is starting to pull in that multiple. We'll come over here and look at that for a second. We'll look at the price to earnings over at Home Depot and see how that multiple is starting to come in just a little bit. That's also raising our dividend yield over at Home Depot as well. I wouldn't necessarily call this a high yielding stock. Certainly with inflation at 8%, 2.5% yield is not even keeping up with inflation, but it is pulling that in as you see this multiple start to contract as this year-to-date stock performance is pulling that in. Revenue came in at $38.9 billion. That was 3.8% year-over-year growth. They did beat expectations by about $2 billion. I'll come over here and show you that Wall Street was actually expecting kind of flat to down sales. Home Depot put up a 3.8% gain. But again, we're in the context of 7-8% inflation year-over-year. So inflation adjusted, these sales actually probably quite frankly would have been down. But I think the stock is popping a little bit by the fact that Home Depot is saying for the full year, revenue is expected to grow by about 3%. Wall Street was expecting growth of about 2%. Again, we'll factor in that it's likely a considerable portion of this sales gain is inflation adjusted. That is why when the company raises their full year guidance by a point over Wall Street, the stock reacts almost in line, because in the context of a high inflation environment, well, obviously sales tend to go up over at companies like this. Now, what's not going up is actually the multiple at Home Depot. Okay, the stock is down on the year, and we're actually seeing this is on a price to earnings trailing 12 months basis with Home Depot. So if you start to look forward on a price to earnings basis, if you believe Home Depot's earnings are expected to grow and continue to improve, we see for the full year, analysts expecting about 3.8% growth on that earnings side, expected to go to kind of like 7-8% over the next 2 years. So when you factor that in, you start looking forward maybe 12, 24 months. Well, your price to earnings actually a lot less than this over to Home Depot. But from a comparison perspective, trailing 12 months, anytime Home Depot's got under 20 times sales, that has been historically over the last 10 years a place where investors step in on Home Depot. I have referenced on this same table of lows here in blue. They're currently trading at about 16 times sales. Now, in terms of these Q1 results, we talked about how we had about $39 billion worth of net sales. That was 3.8% growth. Now, unfortunately, our cost of sales due to inflation grew as well, exceeding our growth rate on those sales. So our margins compressed in the most recent quarter over at Home Depot, 4.1% growth there, giving us gross profit growth of 3.2% year over year. You took your $39 billion in sales, you took off your net cost of 25.7, and you're left with 13.1. Now, Home Depot has other costs on the books. They have these selling general administrative expenses as well. Those grew south of sales. Okay, sales grew 3.8%. You're looking at about the same for selling general administrative. So not bad cost controls there. You went from 6.3 up to 6.6 in cost. So you take your $13.1 billion in gross profit, you minus off the selling general administrative expenses at 6.6. They factor in depreciation and amortization as well. We'll get to add that back in when we get to cash flows. We'll look at that here in a moment. So we have our total operating expenses growing about the same as sales, 3.8, about 3.7 growth on those expenses. So our operating income almost flat year over year. You did go up from 5.7 up to about out very close to $6 billion. Again, factor in an inflationary environment, these numbers are not necessarily keeping up with that. But those are not the only reasons why you invest in Home Depot. Certainly when we get to cash flows and we see the dividends and the buybacks, that's one of the bigger reasons why you're buying a stock like this. Now, you flow all the way down to net earnings, and you cleared $4.2 billion. That was 2% growth year over year. Your diluted earnings per share coming in at $4.09. I told you for the full year, you're paying $7.60. I tell you what, if you have a dividend growth portfolio, stocks like this that are pulled back 25% certainly could be something that you think about in that perspective. Now, from a balance sheet perspective, almost identical to what we saw over at Walmart. I just posted a video about Walmart today. Similar type of thing. We're seeing cash start to flow out of the business to a certain degree. Merchandise inventories, though, skyrocketed. Okay, well up over January. You'd expect that because there's some January and December drain from the fourth quarter in terms of inventory. But year over year, quite a bit of inventory. Okay, I bet it's partly due to the inflationary environment. They're getting out in front of that, but we also have likely seen a lot of inventory that has been delayed over the past 2 years or so start to show up on shore. And so they probably are taking on a little bit more of that. All things being considered, they're adding quite a bit to their inventory stack. Certainly bullish from a sales perspective going forward as well. Short-term debt, this company doesn't have any. Long-term, though, a fair amount, up to 39.1. Last year, they were closer to 35. We'll see evidence of that when we get down to these cash flows. We pull down that $4.2 billion worth of net earnings. You might be wondering, where did that come from? Okay, all the way down to your net earnings. So you have your revenues, you have your operating income, but then you pay interest, you pay taxes, and you come down here to net income of $4.2 billion. Again, I talked about how that was growth of 2% year over year. So you pull that number down on cash flows. So you have your 4.2, compare it to your 4.1, and you come down, get to add some things back in like stock-based compensation, depreciation, and amortization. Take a look at this. For reference, we've been doing a lot of tech stocks where I've been just lambasting the executives for taking all of this stock-based compensation. And here's a reason why. Just $115 million worth of stock-based compensation off $4.2 billion worth of net earnings. We're seeing the opposite when we're looking at the Shopifys and a lot of these tech stocks. They're just egregiously compensating themselves. Over at Home Depot, it's still a lot of money, but in relation to net income and net earnings, it's far, far less. Now, in terms of our net cash provided by operating activities, actually went down from $6.3 billion down to $3.8 billion. The vast majority, in fact, all of it had to do with a change in working capital from a positive 1.3 contribution last year to a negative 1.3 this year. You had an acceleration of capital expenditures, likely due to inflation, those costs going up year over year from 524 to 704. Not a big deal, but we did repay some short-term debt at $1 billion. We did take on about $3.9 billion worth of long-term debt. We repaid some other longer-term debt as well, likely refinancing this. They did repurchase some common stock as well. Quite frankly, when you have low single-digit growth on the earnings side projected really out into infinity, and on the sales side out into infinity, what do you need when you have low sales growth, low earnings growth? Well, you need these dividends and you need these buybacks. $1.9 billion in the most recent quarter, $2.3 billion in a buyback. That's decelerated year over year to a certain degree, probably in part to do with these cash flows weren't quite as good in the most recent quarter. Now, from a technical perspective, I just wanted to take just a broad view. I've got a weekly view of Home Depot, and we've got about a 26-27% drop over the last year. When this stock drops that much, yes, we had this gigantic 40% or more decline in this stock back in the March lows. Okay, almost every stock made this type of move. But outside of that, going back a good almost 8 to 9 years, this stock just, quite frankly, doesn't make these types of drops very often. In fact, anytime you've gotten south of about a 20% drop on this one, it is signal a buying opportunity for Home Depot. Now, I do want to zoom in here and look at this more from a daily perspective. And we do see this stock clearly in this well-defined downtrend. There are some areas of support down for this stock. We did see buyers step in at about this 280 level. There's some sideways consolidation back here that this stock stock made for a few quarters in a row between 260 and 280. I would expect personally Home Depot to find some footing here. Longer term perspective, I did have a much longer term uptrend on this one. This stock is still well above its longer term uptrend. So as this one continues to pull back, if this stock continues to pull back, I wouldn't be particularly alarmed. There's some areas of sideways consolidation that can catch it. You also have this longer term uptrend that should act as some support underneath this stock. Certainly the dividends, the buybacks, and the fact that when Home Depot declines this much, buyers have stepped in from a multiple perspective, from a technical perspective. It all lines up that adding a little bit of Home Depot at this time in like a long-term retirement portfolio or a dividend growth portfolio is normally a very wise thing to do. Hopefully you guys enjoyed today's video. Back again soon with more. Good luck with your investments.